S&P also say that they would expect that there's some slowdown similar to or worse than 2008 if the governments in the Asia Pacific region would use their balance sheets to effectively stimulate the economy.
Yeah.
Is that your view of the way you're looking at the
Well, I think we took the right course of action. If you go back to 2009, there was a lot of pressure on us from a number of quarters for us to do more and to spend more. And we resisted that because we believed that the policies we'd campaigned on and were then implementing were stimulatory. And I think that was the right course of action to follow. My view is that we always assess the situation as and when it's required, but I'm very committed to wanting to keep our debt levels below 30% of GDP if possible. We've got the Christchurch earthquake to contend with. Most economic commentators, including the Reserve Bank and the Treasury, of the view that we are seeing strengthening of our economy and our labour markets. And so, at this point, I think we should follow the track that we're on, and I wouldn't be looking to have extra stimulation.
There's a tension there, isn't it, between you and the Finance Minister saying controlling spending and lowering debt.
Yeah.
And S&P's view of if things turn ugly, you'll need to actually reverse that and effectively borrow and spend.
Yeah, I think the one thing that gives us an advantage over a lot of other countries, we still have room in terms of monetary policy. Interest rates are 2.5% in New Zealand. Most of these countries you're talking about have interest rates of 0. So there's some room there if it was all required from the Reserve Bank. I think secondly, our exchange rate, because it is high, particularly against the US dollar, again gives us some flexibility, and there could be some correction there. So look, the government is following, I think, a credible, sensible path to get us back into surplus and to protect New Zealanders. And I think that's the right course of action. And we'll continue to monitor what happens around the world, but I'm comfortable we're on the right path.
The last point with the S&P advisory today was that they believe that if there were another downturn, it would be deeper and more prolonged than 2008. Is that your view?
I'm a bit more optimistic than that, to be perfectly honest. I think if you have a look at what's happening around the world, firstly, back in 2008, 2009, the banking system was extremely stressed. Now, that situation is for the most part in better shape. So you've seen a lot of the bad loans being written off around the world, and in certain places recapitalisation of the banking system. Secondly, there's no question that corporate balance sheets are a lot stronger. I mean, Apple has $85 billion in cash on their own, let alone a lot of other companies. And in New Zealand, corporate balance sheets are very strong, as they are in Australia. So I think that's better. Thirdly, there's been an adjustment in terms of the labour markets. Tragically, people have lost their jobs, but that's put companies in a leaner position than they were. From the government's point of view, we front-end loaded a lot of our borrowing requirements, so we're well and truly cashed up in terms of our borrowing requirements, and we borrowed that money at very, very efficient yields, so we're paying quite low interest rates for that cash. So I personally think the world's in a lot better shape to cope with this. I think what you're seeing is, and you're also seeing European central banks today coming out saying that they may take some action. So it's one of the reasons why the markets aren't down, in a major way today. I mean, you've got Korea down about 4% and us down about 2.5%, Australia down about 2% in terms of the stock exchange, but they're not dramatic moves. And I think that's partially because the ECBs have indicated they might buy European sovereign debt if it's required. So personally, I don't think this is going to be as bad as what we saw in 2008, 2009.